Hi guys, I'm Beth Goodell.
I'm Samantha Pearson.
We're with Make the Move team at eXp Realty. We are continuing in our series on home buying and just wanted to share with you this is part 3 of 8 in a series on how to buy a house. Um, so today we're talking about securing financing. How are you going to get the money to buy this house? Hey, I know you guys are saying I can buy a house. I have a 620 credit score, but where's that money going to come from? I got to have money to buy this. Now, we have shared with you all different kinds of programs that do help you to buy a house. So if you have a little bit of money, $5,000 ish, I think you have enough to buy a house.
Well, some of the programs you don't even need that much.
Wow.
Yeah, down payment and closing cost assistance.
So there's usually a conventional loan, a FHA loan, a VA loan,
USDA.
and cash. Those are kind of the main ones, but I've gotten ahead of myself.
That's okay.
So first of all, we want you to choose a loan officer, somebody to represent you in your finances that talks you through all that. You don't necessarily talk to the realtor about that, but you want to choose a loan guy.
Right. Real estate agents are in regular communication with lenders before, during, and sometimes even after the buying process, but they are the experts. So we can help provide you to or guide you to the right person, but they are the one you want to talk to.
And if we can match you up with the right one, that can be a real great relationship that you're like, wow, he saved me so much money, or she saved me so much money, and they are fantastic to work with. Because I think generally people like to work with people who enjoy what they do.
Absolutely.
Like,
I do.
I've always loved real estate, but I really appreciate a lender who loves his job or her
Me
job.
too. Me too.
Yeah. You're going to complete a loan app with them. Determine kind of what you want to pay. So sometimes when you have a really when you have a really good job, you have made good money, you don't have much debt, you have a great credit score, you get to choose kind of where you're at on what you're paying for a house. So just because you qualify for $1 million house, you may only want a $300,000 house. And that's fine, and we're going to work with you on that, and they will too. And then we're going to select a home and do a contract on that house. During that time of having the contract, you'll get an appraisal and a title commitment. So when you go through a lender, typically you have to have a survey. You get title commitment from the title company, and we pick a title company. If there's somebody you really want to work with, we're going to work with them and go to closing with those people. So, and they'll title makes sure there's nothing in the history of this house that will come up or you'll get sued, or just make sure it's insurance, make sure everything's good on that house. And then once we get closer to funding, the lender's going to help you to get funding towards closing. So that's the best thing is when you hear clear to close.
Love that. Love those words.
So, know your mortgage options. 3 basic factors are your down payment, your interest rate, your term. So we want to know that you're a 30-year note, or 15, or whatever it is, whatever that term is, what your interest rate is. So guys, that's going to make a huge difference as interest rate. Like right now, the interest rate's about 3.75, which is really good. So that's some of the lowest money we've ever seen. Even at up to, say, my very first loan was 6.5%. That tells you how old I was. Or how old I am now. And that was in the 90s. And, like, I remember my dad being like, oh my gosh, that's a really low rate.
Yeah.
So I would say anything in the single digits below 6% even, or 7, for a lot of people is an incredible number. Like, just so the interest rate went up to about 5% a year and a half ago. Excuse me. And People kind of freaked out on that.
Mm-hmm.
It kind of slowed things down in this area, North Texas. And so 5% is still cheap money.
I know, but we've been in the 3s for so long.
Yeah, we've been at 3. I mean, we were 4 and now we're back to 3, right? 3.75. And so you want to know that. You want to know what your down payment has to be. And you'll go through that all with that lender. Also, you want to understand what is your monthly payment and know what's that comprised of.
Mm-hmm.
Typically, it's comprised of your principal. That's what your nut on your house, if you will, and what amount you're going to pay each month. Then your interest on the note, taxes, which, you know, there's only one thing sure in this world is death and taxes. But taxes you'll have to roll in, and insurance. Typically, those are rolled in. If you make a 20% down payment when you buy your house, you can pay taxes and insurance separately. Secured financing. So once you go through with a lender, you'll go through a pre-qualification period and a pre-approval. So the difference between pre-qualification and pre-approval, pre-qualification is a rough idea of where you're at and how to
without actually substantiating documentation.
Yeah. And then a pre-approval is you've kind of gone through some stuff, and and you maybe submitted a couple documents to the lender, and they're going to provide myself or Sam with a letter that says, I qualify to buy this $300,000 house or whatever it is. And so I always like a letter that says whatever the amount of the offer is I'm making, $285,000, I qualify for that. And that's what that lender from that lender is going to be, the letter from the lender. And help you get further along in buying that house. And securing financing, you want to decide your mortgage options. Do you want a low monthly payment, meaning like you put more money down? Or do you want a low down payment and avoid PMI? There's different loans that can help you with that. So typical, you know, if you're going to put 20% down, that's an 80-20. You're putting 20% down at time of closing. So then you're only paying that 80%, you know, of the value of whatever your contract was.
And you begin with equity.
And you have instant equity. So one thing you can do, which I think is the very best rule of all, is if you have, let's say your payment is $1,200 each month, and you want to pay your note down quicker than 30 years, but you're not comfortable with having more than $1,200 a month payment, I break up the amount of that note over the period. So let's say I have a $1,200 payment, but really I could probably pay a little bit more, like $1,300. So that's the equivalent of one extra payment a year, and pay it just towards principal over the course. I think it shortens the 30-year note by like 7 years.
I was going to say 6 or 7. Yeah.
7 years. So you've just gone for, that's the best tip of the day if you've never heard that. 30 to 23 with a fairly simple step. But it also gives you the flexibility of, should you come on hard times,
And then you're only
you don't have
to pay.
to.
Yeah,
Yeah.
the $1,200.
So when you secure financing, we want to remember your lender decides what you can borrow, not what you
Think you can.
I think you can. And sometimes people will be way less, you know, and I'll go, well, can they found a house they love for $250,000, maybe they're qualified for $230,000. So could they qualify for that? That might be a question I ask a lender. Because it's a lot of information when you're first buying a house. So it's the fact that you might not remember is okay. We've done this a lot. And then we want to make sure it's a monthly payment you're comfortable with. The rule of thumb is to spend no more than a third of your gross monthly income on your house payment. So let's say I'm leasing right now and I want to buy a home. And I've got good credit, but for whatever reason, I'm not quite ready. There are some programs out there that will allow you, they'll work with you, they'll let you work with an agent. You go buy the house you want, but they buy it and you lease from them for a period of time. And once that lease is up, it goes into you being the homeowner. And so you do get that kind of grace period, if you will, but you also get the house you want. So it's really like a best of both worlds scenario.
You try it before you buy it.
Best of all, we know all kinds of people to help you, refer to you for whatever program you think is best for you. And we can help guide you through those people. Typically on one of those lease to own sort of things, it's not like a legal thing, but there are companies you would work with and they would buy the house, and then you would pay them rent, and then you would be in ownership after so many periods of months. But typically they want a $50,000 minimum income, maybe have so much in your bank account, no bankruptcies, that kind of thing, and limit on pets. So there's all kinds of ways. We have all kinds of programs out there to help you buy a home. We have all kinds of people we'd like you to talk to. We don't have one specific lender that you must use. There's so many good people out there. So let us know how we can help you. This has been all about finding the right loan officer. And we'll talk to you soon. Thanks, guys.
Bye.